Hello everyone, my name is Ax and welcome to this episode of my video. So in this short video, I'm talking about entry model, and then the entry model are two types. We have the continuation model and we have the reversal model. Continuation model is just like you want to join the trend. If price is selling, you want to sell. If price is buying, you want to buy. You want to join the continuation of a trade. While reversal is you want to trade against the trend. If price is selling, you want to buy. If price is buying, you want to sell. That is, you are taking reversal. You want to reverse. You want to take market reversal. In a continuation model, all you need is three things: a high, a low, and internal rate liquidity. Then you take your entry, right? This is it. If price is buying, right, the first thing you want to wait for is in a bullish market. The first thing you want to wait for to take continuation trade in a bullish market is your low. If this is our first low, if this is the first low, what is the next? A high. This is the second high, yeah? And this was the last high that led to a break of structure. The next is what? Your internal range liquidity, which is it. So you want to take your entry below the internal range liquidity. After that, you wait for another break of structure. It should be external. Your break of structure to be external, right? So after this is the external break of structure. The next thing you want to identify is your low. This is the low. The next thing is your internal range liquidity, which is this, and this is your high. You take your entry below the internal range liquidity, right? This is a new low, right? That was the last low that led to the external break of structure. After this external break of structure, what next do you want to do? Mark at the internal range liquidity. Then the next is you take your entry. You take your entry below the internal range liquidity to continue the buy to the upside. So this is continuation trade. This is how you join the trend. You see people scaling in trades. This is how I usually scaling trades. Most cases up to sometimes 2 to 3 entries. Right, since I know I'm taking continuation, so all I need is to mark out my high, my low, the internal range liquidity, and I join the trend. Same thing for a bearish structure. All you need to mark out is your high, your low, internal range liquidity. You sell. After the sell, you can see it broke an external structure. The next thing is you mark out your high, and you mark out a low, then you mark out the internal range liquidity. You wait for the external break of structure. Then after that, you mark out your high again, you mark out your low, then you mark out the internal range liquidity, which is this. Then you want to continue the sell to the downside above the internal range liquidity to the downside. So that is how I usually take continuation trade, just like joining the trend when the market is selling or buying. This is a very simple entry model, and I'm going to be showing you chart examples too as well. Now, in the reversal, it is a very complicated one. You know, I once write a trend about reversal, which I'm going to be tagging under this video. So I wrote a trend before reversal. Now, reversal model is like you want to trade against a trend, and in reversal model, you have to be very patient and very patient. Now, in taking reversal model, the first thing you wait for is IRL should be taken. Your internal range should be taken. Now, when the internal range is taken, you don't have to rush. Wait for the institutional order flow to switch, either bearish or bullish. Then your entry should have an inducement to make it high probability, right? Now, this is it. In this case, internal range liquidity has been taken. Then the next thing is what? Price broke structure to the upside. Of course, vast number of people are going to be seeing this as a change of character. This is why most cases change of character don't usually work out, because if you remember this, our continuation model, you know, this is like a continuation model. Price has been selling, right? Price has been selling. Price took out the internal range. So what the price gave us? Price gave us a high. Price gave us a low. Price gave us internal range liquidity. So there is possibility price could just take out this internal range and sell. Now, this is why most cases the coach or change of character usually fail. Now, for you to take reversal, just wait for the institutional order flow to switch, indicating that the reversal is done, because now it's going to indicate that this sell is done, that we want to buy. So you wait for price to either manipulate this first low that led to this change of character, right? You wait for price to either manipulate this first low that led to this change of character. Then after that, you wait for a break of structure. Then you look for inducement, right, to continue the buy. to the upside. Now, but in most cases, the best thing is just to, wait for price to tap into this instead of rushing in, wait for a break of structure to the upside. That break of structure, it is going to indicate that the supply here that was reacting from here has failed. So, we now have another break of structure. So all you need to do is what? Wait for price to give you an inducement, then you take the reversal. Now, this is indicating that the institution, that is supply, is now failing. Series of supply now fail. The moment we have another break, supply has failed. The moment we have another break, supply has failed. So the order flow has switched from selling to buying, right? This is the, best way of taking reversal. Same thing for the sales, right? Same thing for the sales. You wait for the internal range to be taken. Then in most cases, price is going to give what? Price is going to give a change of character to the downside. Now, most time price will come here, take it out, because a lot of people have their stop here, change of character. They want to trade change of character. You don't take change of character like this. This does not indicate that we want to sell, because this could just be our low, this could be our high, and this could be the internal liquidity, and price could just sell to the downside and continue the sell. Maybe price is not yet done with the selling. So in most cases, it's better you just wait for what? For price to either manipulate this or tap into this. Wait for a switch in order flow. Wait for the order flow to switch. Then your entering should have an inducement to make it high probability. Then you want to continue the sell. So this is the model for taking reversal, while this is a model for taking continuation. Now let's go into chart example. Now let's go into chart example for continuation trade in a bullish move. Now remember, continuation trade, we only need three things: a high, a low, internal liquidity, then we get in. Now, the first thing you wait for is what? A break of structure. So this is external break of structure to the upside. So the next thing, what do we identify? We identify our low, then we identify our high. Allow price to give us the high. Let's price pull back a little bit. Now, price has pulled back a little bit. So you can see how this swept liquidity before we broke structure to the upside. So this is our low now, because this was the last low that swept liquidity, and this is our high. So the next thing we want to wait for is the internal range liquidity to be given to us. And did price give us internal range liquidity? Yes, this is it. Price gave us this internal range liquidity. If you check very well, we have the high, right? We have this, we have this. Same thing, continuation. What do you want to do? You want to take entry below here to continue the buy to the upside. That is a continuation trade. And that is the exact same thing that price printed here. So we have a low here, then we have a high here, then we have this as internal liquidity. So we want to take entry or the block, just look for any other block you can take your entry from, then you take your entry from there to continue the buy to the upside. So allow price to mitigate it. The next thing you wait for is another break of structure, right? You can see our price broke this structure and price broke this structure again. After that, what do you want to do? You mark the same thing, a high, a low, internal range liquidity, then you want to continue the buy to the upside. So this was the last low, right? And then this was the last high. And then what do we have? We have the internal range liquidity. You can see price gave us this. We had a pull, and we have this. So this is internal liquidity. So you look for other block, right? Any other block, a valid point of interest below here. You go down to lower time frame, you look for a valid other block, then you want to continue the buy to the upside, right? You want to continue the buy to the upside. After that, if price come into there, allow price to break structure again. After price broke structure again, what do you want to do? You want to mark out your low, your high, internal range liquidity, then continue the price to the upside. So this is a low. Allow price to give you a high, right? Allow price to pull back to give you a high. The price pull back and give you a high. The next thing you want to do is you mark out your internal range liquidity. All right, so price has given us a high here with this pullback. So price gave us this internal liquidity. We had a pullback. So price gave us internal liquidity. So what do we want to do? We want to take an entry from here. It could be a fair value gap, it could be other block. Your point of interest from there, then you want to continue the buy to the upside. So this is a bullish example. And then let's look for a bearish example too as well. So for a bearish example, that is it. You wait for another break of structure. Now you wait for another break of structure again. right? What do you want to mark out? A low, a high, internal range liquidity, then you want to continue the price to the upside. So this is how you can scale in entering in a trend move. Same thing for the sell. You can see how the sell happened too from here. Price broke external structure. We had a high, we had a low. You can see price took our internal range liquidity, we sold. We broke another external structure. We had this last high that swept liquidity. Okay, since then, price did not give a pullback since then, since price sold to the downside, yeah? If you want to scale in entering in a trend move, that is just all you mark out, a high, a low internal range liquidity. Wait for that internal range liquidity to be taken, then you continue the move, either to the upside or to the downside. All right, so this is Euro USD. This was actually based on the trade I took. If you're on my Telegram channel, you will definitely see all of this, which I uploaded then, right? This is same thing. The first thing I did was I waited for price to break structure to the downside because price has been selling, right? I just want to join the sell. So all I did was you mark out your high, right? You mark out your low. Then internal range liquidity, you take your entry above it. You wait for price to break another external structure. The next thing you mark out your high. You mark out your low, mark out the internal range liquidity, you join the sell, right? We can see that the next thing is same thing. You can see how price reacts from this supply because this was the last supply that led to this external breakout structure to the downside. And you can see how it failed from there. So this is how you join continuation move. Now let's go into examples for taking reversals. All right, this is an example for trading reversals. The first thing you do is wait for internal range liquidity to be taken. So this is example of an internal range liquidity that was taken. Liquidity was taken. The next thing you do is wait for the order flow to switch. Like I said before, that this could be a point where price could sell because when you want to trade reversal, price has been selling, right? Price has been selling. Once price break here, this does not mean we have changed trend because this could be our high, this could be our low, and price could continue the sell to the downside. So that does not mean we have changed trend. Instead of that, wait for price to fail the supply, showing that, okay, supply is losing control, then demand, we want to buy, then you want to continue the buy to the upside. So that is for taking reversal. So first, wait for internal liquidity to be taken. Internal liquidity was taken. The second thing, wait for supply to fail. You can see our price broke here because there was a supply price reacted from here, but what happened? It failed, giving us another break of structure, giving us that order flow has switched. So the next thing is you want to take your entry below the inducement. You can see how this thing, they almost look similar because here too, price gave us this, we had a pullback, we had this. So it's still the same thing. Then you take your entry below the inducement. So this is our extreme point of interest, which we can take our entry from. Then you want to continue the buy to the upside. This is for taking reversals because this is for taking reversal. Price might eventually put then after this has happened, what do you want to do? You mark this out again. You want to continue the push to the upside, right? You mark out this has been mitigated already. Then we want to mark out another supply or another demand. All you need to do is wait for inducement to be given. Then you join the trend together. But unfortunately, okay, you can see our price gave us this. We had a push, we had a push, we had a pullback, and we had this. Price took out the internal range liquidity. After that, what do you want to do? You want to join the trend to the upside. If you go down to lower time frame, you can see how the order flow switched. We had this post mitigation, we had all of this, we had another breakout structure to the upside. Let's see if price will reverse back. Okay, price will not reverse back. Instead of that, price continue buying to the upside. So that is how you can take reversals trades. Let's look for another example again based on taking reversal. All right, this is example of a trade as well. GPP USD. You know, GPP price has been selling for quite some time. Price has been selling. So now price wants to buy. We want to reverse. Price wants to buy. So the first thing is I waited for a breakout structure to the upside. Price came into my point of demand. I waited for another, like the order flow. You can see how the order flow switched. So the next thing I mark out my inducement, which I took my entry from here, but I took the entry on Thursday. Yeah, I had my entry like this on Thursday, but price now came into it on Friday after I have deleted my entry because I observed the order flow has switched. We are now mitigating series of demand, and the thing is, you know, the range is still intact. We have a high, we have a low. You can see our prices coming from the discount, and again, you can see how the order flow is. We keep on breaking structure to the upside while all of the low are protected. the low are protected. Even though we have been selling for quite some time, the order flow switched was